Good early morning, peoples. It is Bruce with Targeted Wealth Creation bringing you REX shares declaration and comparing four of their funds that have been in existence. Their MicroStrategy, their Coinbase, their NVIDIA, and their Tesla is underlying. Those are all competitive with other funds. So I will show you how they stack up. And they launched three new funds based on HOII, the underlying. So they have a few competitors there. Lilly, which I like, a pharmaceutical, and outside the pressure of the FOMO and AI, Mag 7, etc. And then CoreWeave, which is right back in that FOMO space. Certainly set up to not perform very well short term. All right, so let's go through the detail above up here and take a look. So again, we show a bunch of NVIDIA underlyings along with NVIDIA. I'm stopped doing a lot on that and just jumping down here. So what you guys care about, who's paying the most and who is nav eroding the least to give you the best total return. All right. And two funds stand out in that regard. REX, the topic of the video, along with Roundhill. So right now it's 99.24 on the total return over 174 days and 85.19. So it's a 14% win, better win for Rex. Now, Rex is getting there similar but slightly different. So when we break them down, NVDW is paying you more in yield along the way. They're paying you 68% annualized return, a real return over 172 days of 32.59% in yield. But again, we never chase yield, guys. If we wanted to chase yield, oh my gosh, let's go over here and look at Granite's NVYY, right? So the distinguishing factors, most of you know, ending in a single Y are mostly the yield max single stock funds. There are exceptions, but for the most part, REX ends in II. You see, NVIDIA for yield max single Y, double I for REX, double Y for Granite, and in Roundhill, always ending in a W. Okay, so those are their single stock funds. And again, first place, NVIDIA's REX shares, and second place is Roundhill's. I almost said REX shares, but Roundhill's NVIDIA underlying fund. Again, 68 and 16. 51 with, so the nav gain is helping these guys. Okay, they stabilize it, they get a nice gain, they get a nice distribution, and collectively they've outperformed. I'll show you the results of all four funds. Again, I started it this way, and some of these read data in here. Other times I replicate the data down below. So I'm not doing a whole lot of talking about these because I like comparative time, days in the market, and the exactly same start date. So, if NVIDIA sells off hard in an April and somebody started in May and everybody else started in April, it's not really fair to include different time periods. Okay, I think you guys get that. So let's go to the Tesla funds. Again, we're going to focus on the second group. And once again, we have Rex winning that. More, probably even more substantial. So they had a 19-point win. Here they got a 24, almost 24, high 23% victory. Second place. I don't even show it. Here it's 14 points, right? Here it's almost 24. So I don't need to show anybody. And so TSLP from Curve hung in there in third place. A strong second, but not a great second, is Roundhill, right? Granite is bringing up the rear. HOII is okay, not as good as Curve and not as good as Roundhill, and certainly not as good as REX shares. All right, let's move in. Now, this one is the ugly sister contest, right? Because they're all ugly. It's just one's prettier of the ugly people, right? You get it. So it's now turned even red because MicroStrategy is just massively selling off, guys. No ifs, ands, or buts. Will it fix itself? Hope so. But until it turns, I certainly have no desire to be in these funds. I don't really invest in them much anyhow. I bought 100 shares of MST to watch it for a while, but that's about it. It's been quite a while since I've owned any Misty. Um, and I've said 3, 4 months ago, anybody in crypto wanting an income fund, please utilize the futures or IBIT or the who's the other one, FBIT or whatever it's called. There's BlackRock. There's a couple of big funds that use basically a a tracking stock. Okay, and they write their options on that or swaps, whatever their method is. I like that much better. That's a real Bitcoin oriented fund as opposed to a MicroStrategy. MicroStrategy is switched to becoming less premium. So it doesn't even have the same, it has a negative premium to Bitcoin. It used to have a positive premium. In other words, MicroStrategy carried a premium over Bitcoin. No longer the case. Michael Saylor, with his current strategy, is probably going to end up, no pun intended on strategy, will probably get to break even on Bitcoin. If over the last 5 years, okay, Michael Saylor has bought dips, bought highs, bought lows, bought more, spends billions, okay? So with the massive fall in Bitcoin, okay, he's now got an average price of Bitcoin around $74 over the last 5 years. So when you consider that Bitcoin is 94, whatever the number is, I don't have it in front of me right now. His average 5 year percent gain is around 5%. He could have parked it in treasuries and done just as well. Now, granted, when it's 130, okay, and his average price is lower, okay, but it's not working. If he would have invested in the S&P 500 or invested in gold over the last 5 years, he would have made 5 or 6 times his 5%, okay, on that. So, not the best investment. Again, you choose to judge somebody currently as opposed to the past. I remember listening to him and like him and think he's very bright. He was saying, hey, you can expect over a number of years like a 54% return on Bitcoin. Well, depends on the time frame you want to measure it, right? It sure doesn't feel good when you buy it at 100 and it goes back to 50. But again, if you were back buying in 2017 for $500 or $1,000, you look pretty at this point in time. But a lot can be said for that. You can say that for Amazon. You say that for Nvidia. If you'd have bought Nvidia, how about Palantir? You could have bought Palantir for $4, right? When it's $170, that's a bit of a gain. Doesn't feel good when you own it at, 190 and it goes back to 90. And all you have to do is look at Tesla, right? 400 to 100 to 400 and all over the place. So always, and here's what I'll say to all of you guys when you invest in these funds. I started a year and a half ago, almost 2 years ago. Well, no, about a year and a half ago with my YouTube. And I said, the key is total return. Not many people were saying that. Most people were saying yield. And I explained very succinctly how to calculate. And I did all my spreadsheets, showed all that. I was one of the early ones that compared. Most YouTubers are lazy. They just want to go out to some tool and let the tool do it for you. They don't want to take the time. It takes me hours and hours to do this. and I'll make $5 or $8 on the video, maybe $15. But that's not where my benefit is. My benefit is over on Patreon as we entered the commodity super cycle. I'll talk a little bit about that on the end. And most of you that have been with me and understand what I'm really trying to tell you are already over there. And we're all making money. Anybody that bought maybe October 16th at the high on the metals and miners, look, you get a minor pullback, 25 or 30% feels awful. For me, owning all that stuff for the last year, it's minimum. You know, my average gains are 150%. So when I pull back 30%, I don't like it. I see it. I hedge some of it, but it's going to go a lot higher. And so the ultimate thing here, I talk about techniques by the fund companies. I talk about which funds I like better. I always say in a bull market, which of these funds do you want to own? Well, so far, the Rex and the Roundhill have stood out to me, okay, for performing. You don't want to own, in my opinion, mostly yield max because they capture 33% of the upside. These other funds can capture 50, 60, 70% of the upside. And somebody says, yeah, but Bruce, they have leverage, so they go down greater in a down market like Roundhill. That's true. But what the hell are you doing buying an income fund that you're bearish on? If you think over the next year that fund's going to go down, don't buy the stock. Don't buy the income fund. It's stupid. It's ridiculous. The definition of insanity, right? I get it that you got into Misty. I feel for you. I have a lot of people coming into my Patreon. We're redoing their whole portfolios, especially those that need income. So I've identified the commodity super cycle 9 months ago. We're in it, guys. I know what it's going to do through this decade. So the idea is go to income funds. There aren't as many. There's a ton in Bitcoin and all of the AI FOMO stuff in the Mag 7, but that's not where the performance is going to be going forward. That's where the performance has been. Okay? We've been in a 15-year upcycle or bull market in tech. Guys, you know how that ends? Not so well. Now, over the next 5 years, we might average 3%. We may have some 15% down years, an occasional 18% up year, and pretty flat to slightly up over the next 5 years while we're killing it in the commodity super cycle. You know what that's called? Sector rotation, capital rotation. Money moves where it's treated the best. The pros know that. The hedge funds mostly know that. I know that from 45 years of being in the market, and I'm already positioned. And I teach people in Patreon how to do that. And it's painful. I feel when I see people, buy, their average price on Misty's $32 and they had to sell out recently because they keep hopium, hang on, I'll get even. That's not a great strategy, guys. You got to be ruthless with this stuff. When it turns against you, go where your money's treated better. I'm trying to identify bull cycles. So it goes back to what I'm saying. Not only you can't get total return here. It isn't, this is a better fund. Sure, IMST, right? Bitwise, the parent company, they pay these big distributions. Who knows if it's real, capital return of capital and they're going to run out and eventually NAV erode? I don't think so. At least on Yieldmax, they just had a steady NAV erode. But on the really great funds in the really great heyday, they appear to be great. But I would argue with you that if you were in Misty, granted you wanted income, you didn't have time to trade, you didn't have to, you'd been way better off. If Misty's 100% return on the NAV in a year, which it had some years it was like that, then you would have had 300% return on your NAV if you bought MSTR. So it never was the outperformer. It just was, wow, I can get a, 80% dividend yield and wow, my NAV is up 100%. So what happened to that for the person who bought at 32 and it's at 8 or 10 or whatever the number is. It's ugly in any way you look at it. There you go, 788. Put that in your pipe and smoke it. That's just damn ugly, guys. That's 75% erosion. There's no payments that can make up for that, right? What's Misty paid here over this period of time from 6.4? It's paid $7. How many dollars has it gone down? Well, I take it back. Since 6.4, it's paid 586. This is a longer period of time. So it's paid you $5, but it's eroded more than that, right? I assume that's, yeah, this $22 over here to 7. So it's gone down 13 and it's paid you 5. That's a recipe for bankruptcy, guys. So you do not want to be in income funds when they're in a down market. I don't know that this is winner or not. No pun intended for the inverse fund, right? Of crypto. But it sure feels like it. It sure feels like we could go down to 74 and 50K on it. Not saying that Bitcoin's done, but you sure in the hell don't want to be in this kind of situation going down. I mean, it's just ugly. And a lot of you are coming to me and I feel for you and I say, yeah, you got to sell it, right? This is not the time. I mean, if it wakes up and shows you it goes back to 10 or 11 and Bitcoin is really moving, I wouldn't get back in Misty. I'd probably get back in a Bitcoin fund if I was out of Misty. Like I said, I think Sailor has a long way to go to show me that he's coming back in strategy. But you got to think like that, guys. Some of you have done a better job. I counsel people all the time. So people in my high tier group, I spend an hour with them on the phone and we talk about portfolio allocation. We talk about keeping income. I'm encouraging everybody to get into the commodity super cycle. What is that? That's when real assets, or hard assets is another name, start outperforming the stock market, right? Warren Buffett would be in, his Berkshire Hathaway. He would be going in, the Netflixes in recession times and foods and things that people have to have during recession. Razor blades, right? You don't stop taking a shower, you still buy soap. Let's hope so anyway, right? But there's a lot of things that just go on, and those are defensive stocks. They hold their own in that kind of environment. The other thing that we're going after, guys, I just came out. For those of you that are in Avgo, Broadcom, and any kind of income fund stock, anybody that's in Nvidia, anybody that's in AMD, anybody that's in the big chip players, whether it's income or not, I just called a 40% down strong probability based on a topping pattern that I've seen 2 times before in the last 4 years. Guys, when it gets stretched, when the SMH, because that is a semiconductor index, I talked about this, when that gets stretched to 102% above its 200-week moving average, it's massively stretched and is very likely. The last time in 2022 it happened and went down 40%. It happened again in 2024 and it went down 45%. The time frame somewhere between 2 months on one of them and 4 months, okay? Doesn't drop in 3 days. But that's a pretty ugly decline and that's what we're set up for, okay? Now look, it's never straight down. I've already gone in and I bought a 3-time, okay, inverse semiconductor fund. So I gain, 3 times leverage when that SMH underlying or another semiconductor index, they're all so close, goes down. I'm up nice on that and I'll hold it. I may swing trade it. And look, one day it can be down 10%, the next day 8, but it's working its way down. Okay. Lower highs and lower lows. And could I go wrong and have to get out of it? Yeah. But I see that topping pattern. These patterns in the markets you can see within 3 months, everybody is going to be saying, oh, yeah, we're in a commodity super cycle. The hedge funds were already out there talking to the high net worth individuals, 7, 8, 9-figure people, and they're re-diversifying their portfolios out of the Mag 7. When you have two stocks, Nvidia and Apple together, two stocks, it's over 16% of the valuation of the S&P 500. That is crazy. Never in the history of time have we been so vulnerable to that. On one hand, Nvidia has been a fantastic company, but it is so priced perfection. Guys, did you know this? It's funny. I find cycles. I study history. I find cycles. I know. And then when I see those cycles and they're coming again, I identify them and I move to those assets. And even within that cycle, first was gold. Okay. All the smart money around the world, the central banks started buying gold. They're like, why? Because all the paper currencies are going down because all the first world countries or their GDP, their debt to GDP is up over 100%. Never in history have they done that, right? So they see the handwriting on the wall after gold, and I waited and waited, right? Gold's been running for almost 2 years, but I waited for the gold miners to wake up. They've woken up. 4 months, 6 months now. Wait till all of you retail people get killed continuously on your Mag 7 and your AI FOMO, and you shift over there. Then we really run. We have valuations that are half, okay, on PE and free cash flow, yet we're outperforming the Mag 7. Newmont, the world's largest gold mining company, was #1 in the S&P performance for a while this year. We're in a slight pullback now because nothing goes straight up. You don't run up 100%. When you do, it's very strong, right? You get stretched over the 200-day moving average in this case, and you retreat. And we're in the process of that. But I tell my people about that. I tell them what. So if you're going to buy a round hill fund right now and you want to feel like you're good for 4 years, now it's going to run. When you buy it, it could go down 30% in the next month. Okay. But I guarantee you, in any way I can, from education and knowledge, been there, done that, played that. Okay, that you will be up massively on that kind of fund. So if you're going to do a damn income fund, do an income fund that has a multi-year, right? How would you like to have had Nvidia available in 2020 and rode that thing for 4.5 years, right? With massive growth. The same thing in Palantir. You didn't even have income. Palantir was $4 and went to almost 200. You didn't even have those funds available. And they were volatile. I mean, I saw Palantir go from like 35 to $4. And I loaded up on some way back before there were any income fund. And I sold it way too early because I didn't understand the cycle on them like I understand the cycle on the commodity and hard assets because I've played that. I've studied that, right? After the dot-com bust, I'm like, what the hell is going to go up, right? And I found gold in the commodity super cycle. So between energy and the precious metals, that's all I played for that decade. Made 8 to 12 times my money. And I'm a lot better at it now. So I expect to make a lot more than that. So we got 5 more years, guys, in the commodity super cycle. Energy, you got uranium, oil will start to move. Oil should double, triple, probably quadruple from the price it's at right now by 2030. Now, that seems hard for people to imagine. There's a lot of money there. There's a few income funds. I talk about all that on my Patreon. I'm debating on whether to just talk. I have that subject matter that like I'm doing here because I should just be doing Rex. But I can't help it, guys. I can't. My enthusiasm and knowledge of this, I really want to help people, and I'm doing that every day. So be damn careful with these funds. And they don't crash like a big, massive crash. Even if the semiconductors pull back 40% from top to bottom, they may rebound back up 3/4 of that move. But it's like societies. They don't decay and die all at once, but they do the same thing. History, they say, rhymes. It doesn't exactly repeat. So we're 15 years in the tooth, okay, of all of this upcycle bullish on the triple Qs, and even the S&P's been phenomenal. It's just not going to sustain itself. Capital will flee and capital will go else. Where else? And what do you think? A commodity super cycle? It's a boom and bust cycle. We're in the boom cycle. It goes gold, precious metals, it goes energy, it goes grains, it goes real assets, hard assets, lumber, cattle, foods, grains. Energy is very big, right? As you can imagine. And it's really a dying of the bond market. The bond market is dying. They're even talking about reallocating, the 60-40 model. A lot of people's models in these hedge funds now on the very, very wealthy, they're recommending 20% of gold, 20% to be owned in gold. So I'm 85% in the commodity super cycle right now, guys. I get a little smattering of some AI and a few things, but they're very small. This cycle will blow the doors off. This is generational wealth that'll be made. The longer you wait, the later you're in. We're in the bottom of the third. Most of the retail will be coming in the sixth inning. And it'll run, but they'll get stuck like they always do, the same way you might be stuck with a Misty, you might be stuck with some of these others. Now, I realize Bitcoin may get there, but it's not showing me that it's digital gold. It's not showing me yet that it's a store of wealth. Now, if this is a winter cycle, that's fine. Maybe we've got another year of being beat up and it takes off. But I can ride that cycle by watching it, but at least interest in it. I understand this commodity super cycle. And this thing is running, guys. And this thing will be fabulous. Again, not without volatility. The uranium aspect, you want to talk about volatility. Oh my God. But a lot of money can be made. You just have to, I tell people right now in the gold miners, get right and set tight. Get you a portfolio. I talk about that. I talk about portfolio allocation. Go with the big cap, the large caps, the safe ones, right? Maybe 60% there, but there's 10 baggers, 15 baggers that you can invest in, but it's probably 20, 30% of your portfolio. And some of them are late stage developers that are just about to go into production. Some of them are still exploring where they're drilling. They've had some mineralization. They find more. Oh, and what about all the rare earths? Well, there's a lot there too, guys. So I talk about that kind of stuff on my page, and I'm not going to give away all of it on YouTube. And to be honest with you, most of the people aren't even going to watch it anyhow. 4 or 5 months ago, I said this in my last video, that in May I started, then in June I did more. And I had like 11 videos on why the commodity super cycle, why gold and silver miners, and what they're going to do. And you know what? Almost all the names that I put out in those videos are all went up 100 or more percent in 3 months. Yeah, some of them might only be up 50% now or 70%. But if you look at when I published all that data, I know what I'm talking about. I understand this, guys. All right, so let's finish this up. Sorry on the rant, but all you guys that know me, it's what I love to do. And again, I cannot because I have a paying audience over there, and then I do individual sessions. I teach options over there in 3 training sessions. I'm going to have a follow me on options tier added. There's a lot of things I'm doing because people are desperate for income and they've been misled by Wall Street. They've been misled by the yield maxes, right? The yield minimums now. They just tell you, oh, drip, add more. They get rich telling you, yeah, they warn you, they have to by the SEC guidelines. They're little tiny fine prints. And the FOMO just gets nuts. But you guys realize that, getting 100% return in 3 months and 100% yield doesn't mean that you can retire and get that for 20 years. It never will. You can't do that in my commodity super cycle. Guys, we got 5 years, maybe 6 out of this to maximize wealth generation. That's the nature of the beast. I wish it could go 20 or 30 years, but it doesn't work that way. And we may have to wait another 20 or 25 years for the next one. I probably won't even be around. I got 45 years in the market. So get right, set tight, learn this, come over. Okay? Don't miss an opportunity of this decade. It is not in the AI and FOMO. I know some of you crypto guys, you hate on anything that's not crypto, but that's a death signal, hating on it. I don't hate on crypto. I was a gold bug, but I learned to appreciate crypto for what it is. I hope it gets going. I see a lot of utility, okay, and the crypto technology. But I'm not so sure that Wall Street didn't steal some of the thunder with BlackRock and Larry Flint and all that FOMO and Michael Saylor and people that aren't patient and don't get right and set tight, that do house mortgages and the HELOCs and all that shit on the Misty Coney, FOMO, Ulti, all that stuff, guys. So vulnerable, so vulnerable. I've made mistakes. I played gold futures where I could hardly sleep. I had $250,000 up days and down days, and I only made a little more than that in my annual salary. How am I supposed to focus on work if I'm like that? But it still was just, a smaller percent of my portfolio, but it didn't matter. You have to look at it in reality, right? I had a lot more up days than I did down days, but I didn't appreciate that. You can't sleep when you play futures because it's traded, 5 days a week, 24 hours. Well, guess what now? And retail on some of these funds. I don't like that. That's scary, guys. It doesn't end well. Be careful out there. Margin's okay if you really understand it, but it can just wipe you out otherwise. All right, guys, enough of the rant. Let's finish up. So this is the ugly contest. It doesn't really matter, but IMST, right? Bitwise does win it slightly. Misty's not bad at 31 on the net, but it's still ugly any way you look at it. I mean, IMST and Misty paid a lot, but they also nav eroded. So let's go down to coin, another one, right? Coin can fly, but I think coin will, you may be, well, you see the reverse splits coming, right? Otherwise, Coney go down to zero. If we're going to go to 50,000, who knows, right? I'm not calling it. I'm just saying the technicals tell me that it could. If it goes to 50,000, Coney's zero. No wonder they need to split it. This stuff's ugly. So again, the best of the worst, right? So you got a minus 1% on REX. So no, I take it back. Oh, this one by far. Yeah. So Bitwise. So Bitwise is the winner. I've gone long enough, guys. I'll leave the data on the screen. What I did, Rex came out with HOII. Again, a dumb way to do this, but you have no choice. I compare these over all the time. Every week I compare YieldMax versus Roundhill, same funds that they have. And we're up to like 19 or 20 of the same funds. I even look at WPay versus YMAX and Maggie versus YMAG. But you can look at that, guys. Honestly, that's not the place to be. Other than a GDXW, I wouldn't be in GDXY because it doesn't have the leverage. GDXW will kill it, and we're in a commodity super cycle. You have a lot more uptime than you are downtime. You want that leverage. Okay, so if you want an income fund, go buy GDXW. Now, don't tell me a week later it went down. It could, but we're in a commodity super cycle, guys. Gold's going a lot higher, silver's going a lot higher. They're probably going down for another 2 to 3 weeks. I do all the technicals on my Patreon, people. I post once a week. I review all of the technicals and I tell you. So I'm expecting a downturn, but I don't worry about a short term, especially on my smaller miners. I don't trade them. I hold them. I have a core position. Get right and set tight. They're going multiples higher. Now, in some of my big ones, I'll have a core position and I'll have a position I use for trading. and I'll play options and do those things, right? There's great option setup just for income generation on your own. You don't even have to be in GDXW. But I would recommend that if you're in GDXY, sell it and go to GDXW. Just no sense on being GDXY. They can only capture a third. So on these guys, right? New fund, two long-term funds, but I broke them back. The problem is when you look at 14 days and you do, here's the reality. So HOOW is paid, 6.8%. HOOY from Yomax have paid 3.72, and they've only paid 0.49, right? But and they've receded or had NAV erosion for the 10 days they've been out less, 98 versus 99 versus 99.79. So again, you don't, who, because of its leverage, goes down the 20% more than a HOOY. So right now, I'm not bullish on HOII at the moment. It's run so much. It's been one of the best performers in the stock market, in the yield side, on the NAV increase. But like all great things, when you stretch a rubber band just too far, or you blow a balloon up just a little bit too much, what does it do? It busts, right? Comes down. So that's probably what's going on. Again, I'm not a market person that can tell you from day to day, but I get the sense. I know what the commodity supercycle impact does. If the Dow, the S&P, the Nasdaq average 4% over the next 5 years, that commodity supercycle sectors are going to be 5x, 8x that performance. So why not own assets, whether it be income or growth or a combination of both? I mean, hell, even if you own GDXY, you're going to do a lot better than most anything else for 5 years. But do I want to own one that can only capture a third? No, I really don't. I'd rather get more income, and then rather have more money. And then I use options often. I put synthetics, right? Sell a put, buy a call when I sense the low is in, which I'm looking forward to in a couple of weeks here to go long by using leaps. Not I don't do those things on a week or a 2 week basis or a month. I want to get that edge. When you use options, you need an edge, okay? I've been a winner in my lifetime in options, but only because I study, I'm conservative, and I look for that edge. It's hard enough to beat the markets. 90% of all the calls that are bought expire worthless. So people basically lose their money. You've got to have an edge. You've got to know what you're doing. You got to understand the underlying. You got to understand RSI. You got to understand technicals. Fundamentals tell you what to own. Duh, commodity super cycle. Technicals tell you when to buy and sell. Okay. When the fundamental is so strong on some of them, I get right and set tight. And then I have another trading position. I think I'm good. I can do that. I want to leverage with options. I can do that. Okay. You have to be smart. You're not going to beat the pros. Okay. Unless you outthink the pros. And some of them you can, believe it or not. Some of these hedge funds aren't all that bright. Some are. And those that are already in the commodity super cycle. It's just like CEOs. Some of these people are really sharp, right? I mean, Jamie Dimon is telling you what's happening. People aren't really listening. Warren Buffett has told us what's happening. Yeah, he got out of the market a year ago, way early, sitting on his billions and billions in treasury. Well, he started to make some moves, right? Big moves in oil. Why? Because he knows what's coming. Why do you think that the chips that I was talking about aren't going to perform well? And they're vulnerable to 40% down and they're overstretched. You know why? Because Nvidia sets the tone with the largest market cap in the world, bigger than Nvidia alone is bigger than its market cap than many of the GDPs of countries. Put that in your pipe and smoke it. So when you think about the overvaluation, NVIDIA knows that. They know it's hard to sustain the free cash flow and their margins, and they're stretched right up to perfection and some. So they've come up with some creative accounting schemes and some systems to sell more chips. So what happens? All the Mac 7 are competing with each other. They know they got to have data centers, the AWSs, the Azures, right? Plus all of the AI that they want to give people that's eating everybody's jobs. So they got to have more and more data centers to support all that. What do data centers take? They take all the equipment inside. What does all that equipment inside need? Power. Guess what we're running out of? We got 30-year grids and 50-year grids. Depends on the areas of the US. Microsoft's already had 2 data centers canceled, guys. A few others have as well. Why were the data centers canceled? They were canceled because the power company in that region, say a Dominion or a Southern California Edison or wherever, they know what their power grid is within their geography, and they can't handle 600 megawatts or these additions, and these data centers take massive power loads. It's expected that the world's energy consumption will double by 2035, and the only way we can have the baseline power that will really fuel it is nuclear. US has really gone all in now on nuclear. France has been a 70% nuclear uh, provider for years. Japan was till Fukushima. Then they shut it all down. Now they've got most of theirs back. But these companies, anybody that's going out and saying solar and wind are the way to go, yeah, they're little 1%ers or half percenters. They're terribly expensive, terribly inefficient. Okay. I get it. It's green, it's carbon reduction, but so is nuclear. Unless you have an accident, which is a whole different thing, and it's not carbon you have to worry about then. Okay. But the technologies have come along. But when these data centers get canceled, let me go back to my point. What have they been doing? They've been buying chips like mad. And the latest, greatest chips. Every year, those chips double and quadruple in their speeds. So if you buy a chip and you set on it for 2 years, it's worth 10% of what you paid for it, just waiting 2 years. Because it's not efficient anymore. It's not fast enough anymore. It's not energy efficient anymore. So these companies and NVIDIA and AMD and everybody has been really pushing them, and they've been buying like crazy, competing with each other. Now they can't power them. So what are they doing? They're canceling orders. Guys, it's just started. There's also a bit of an accounting scandal because everybody's saying, wait a minute, they're writing these things off over a 10-year period, which makes their earnings look better. But the reality is that they only have a life of, say, 2 years, 2.5 years before they're worthless. So that whole accounting thing may come back to haunt the market. The market's already priced for perfection. So, guys, that's why I look at things. I don't just look at things. Oh, the chart technicals look like that. If you look at the charts, these things ran like crazy. NVIDIA, AMD. I was watching the AMDW, just massive NAV increase, right? Nice payouts. But things change. The sentiment shifts, right? The underlying, the fundamentals change, okay? And then they cause the technicals to change. So it's the same thing, I assume. I haven't looked at it at the nth degree like I have the energy side because energy is the commodity super cycle. I'm already buying into oil companies with high dividends, expecting to write a lot more options. What is an oil company going to have on profits when you have $60 oil? If it costs them 40 to produce, what happens when oil is 100, 120, 160, 200? I think those numbers are baked in probably higher. We could probably go as high as 240 on this next cycle. May sound crazy. Do you know where we were in 2011? We ran from earlier in the decade from $20 oil to $147 oil. So we went up over 7 times. Okay. We could do the 7 times again. Our low's probably been 50. So, we may still have 55 before we finish. I like to get in early, guys. I don't worry about, oh, I got in at 58 oil and it dropped at 55 and then a year later it's 80. Do you think I care? While you wait, you may not catch that. Nobody can catch the tops and sell at the tops and buy the exact low. It doesn't happen. Anybody that tells you they do that all the time, I've done it once. Complete luck. Yeah, once out of 1,000 times. So, it's better to just understand the fundamentals. And the fundamentals are we are in a capital rotation in a commodity super cycle. Another common word are hard assets. People move into hard assets. And it's not good in the regular market. I'm not talking about a 29 crash. That's not for me to say. I don't believe the same that we have that, but people may feel like that. Somebody said to me in one of my sessions the other day, we all sense that something isn't right. We all sense the need for more money, that inflation is higher than we're being told. And that sense is real, guys. And so the market hasn't reflected it. Yeah, we might be 8% or 6% off the highs, but we could easily go down 20%, 30% more. All right, guys, that's my pitch here. I know I got way off of Rex. I am going to do probably another video on some of the things in the commodity super cycle in general. I'm not going to give away all my names and my strategies, but I'll do that on the YouTube for those of you that are still over here. And then on my Patreon, I will do a deeper dive in companies and why and, you know, what to expect. What's the upside? What's the income oriented? How will that grow? So that's what the people need in Patreon. And that's where I want to be. I don't care about the subscriber count. I don't care if I'm 7,000 or 10,000 in 5 years. I really want to help people. I help people in the Patreon. All right, guys, that's it. This is Bruce with Targeted Wealth Creation saying bye, not financial advice. I'm not a financial advisor. All right, guys. Bye for now.